All right, looks like we're live. So good afternoon, everyone, and thank you for joining us today. My name is Alina Islam, and I'm a Senior Research Associate here at Red Cloud Securities. Today's webinar focuses on Galleon Gold Corp, an exploration and development company that's focused on its West Cache Gold project located right in the heart of Timmins mining camp in Ontario. Galleon has drilled up a sizable resource and is now advancing the project with permitting and development work. For the webinar today, we have with us David Russell, President and CEO. David will provide an introduction to the company, including an overview of current exploration activities and catalysts that may lie ahead. After the presentation, we'll take your questions live. Please send us your questions via the chat box and we'll get through as many as we can. Before we get started, though, I do need to mention the fine print. For Galleon Gold, there may be some forward-looking statements made on this call. I would direct listeners to the cautionary note on page 2 of the Galleon Gold corporate presentation located on the company's website. For Red Cloud Securities, I would highlight that this webinar is for information purposes only and should not be considered a solicitation to purchase or sell securities or a recommendation to buy or sell securities. We note that this call does not take into account the particular situation or needs of individual investors. Participants should rely on their own investigations and seek their own professional advice before investment. Please see our most recent research located on our website for Galleon Gold specific disclosures. With that, David, I'll hand it over to you. Please take it away.
Thank you very much. That was a great introduction, Elena. We'll start with a presentation. Now, what this presentation is about is Galleon Gold, the company, but specifically the West Cache Gold project. We're really a one project. We've got other projects in our portfolio, but probably 95, 98% of our time, money, efforts, and the people we put on the project are focusing on West Cache. West Cache is a advanced exploration project. It was started by Explorer, EXPLOR Resources. We merged with them over 2.5 years ago, took on their portfolio of assets, and then we started advancing a database that was some 150,000 meters of core drilling. We added another 50,000 meters of core for over 200,000 and 500 core holes to bring it up to a PEA status. And that's where we sit today, and that's what we're going to talk about, that and the permitting and how we're going to take this project forward to becoming the next major mine. Now, this is the forward-looking statement. I'm sure you can memorize very quickly, and we move on to the real presentation. Now, being in the Timmins camp, that's important. A lot of major producers up there. There's been over, say, 120 million ounces of gold produced there right in the town itself, which is Newmont being controlled there, and the old dome complex. That whole area there is roughly 80 million ounces directly right in town. Now, what we did is we put together the PEA study to say, okay, should we take this project forward? It said, yes, go with it. It's not the full mine plan. It's just a study that says, here, you got great economics. Take this project to the next step. The next step will be going underground bulk sampling on this project. Now, you'll hear about the management team. I emphasize the management team. All mines are built by people that have done it before. That's what decides it's going to be successful or not. And we have a large land position, over 10,000 hectares just in town there. On to the actual stock end of it. Shares outstanding, 54.4 million. Roughly 35% of it is held by two different people. Eric Sprott, his private portfolio, and then CCM Capital. They're friends of ours out of Germany. Very strong shareholders. They were actually Explorer shareholders, and then they stayed with us after the merger. And then we have insiders, which is myself and Lisa Buchan and a few others on the board. And then we have the retail side. And then we've got some options outstanding, 3.5, warrants through 13.7. Most of them are out of the money right now, just like everybody else. Everybody's undervalued a bit until we come back out of the cellar. But total shares outstanding would be 71. But the market cap based on the shares outstanding is about just under 13 million right now. Now, our stock price when we put this together was about 0.235. We do have to improve that stock price. We've got to get out and tell the story. We actually started the company, the project, right during COVID. Of course, Murphy Law says that's going to happen. It did. And now we've got to go out and start telling the story and get interest back, not only in the gold business, but our company itself and the project we're developing in Timmins. So let's start with the far side of Timmins. Hislop Mine, Black Fox Mine, Stock Mine, and Mill. McEwen Mining has it now, but the key here is several of the management people worked with me years ago, we'll say 2002 through 2011. We actually built from the first operation, small little ramp position, to the Black Fox Mine. We have the Stock Mill we bought from St. Andrews Goldfields at the time, and we put the whole complex together as one. And we developed it very similar what we're doing now at West Cache. We drilled and drilled and drilled till we had about 350,000 meters of core drilling. Then we built the mine called Black Fox. We rebuilt the mill from 800 metric tons to 2,200 metric tons. It was a 10-year plan, went into production in 2008, and it should have closed in 2018, but it's still in production under McEwen, and I think they've got over 2.5–3 million ounces on the books. So this mine definitely has longevity. What I can say is I see a mirror image at West Cache, only much larger, both open pit and underground. I will mention the Aquarius. This is now owned by Agnico, the Taylor mine, that sort of thing. But you get to the Newmont operations, this would be the Hollinger McIntyre and Dome in town. But right beside it is the Bell Creek mine. That's Pan American Silver, originally Lakeshore, and that mine's still in production today. That mill is actually milling their own ore at Bell Creek, as well as the Timmins West Mine complex, which is on the west side of our property. And then you get to our property, 10,000 hectares. We're going to talk about 6,000 of it that's gone under lease now with the ministry. And I'll blow it up on the next slide. You can see, the land position compared to the Timmins West. We've got about an equal land position or larger. We picked up over time the Ogden property and the Price properties. And the original property was the West Cache, or what they really called TPW. We thought, a better name would be West Cache. So we changed the name. But anyway, we went to lease on the property. It's all leased now. It was signed off by the ministry a couple months ago. And now we're taxpayers on the property. The darker area here is patented original claims that we picked up ourselves about a year after we merged with Explore. Now, the yellow area will define just the area we're looking at right now. We can say we're probably 8 or 10% drilled on this property, and that is in specifically this area. And I targeted as low-hanging fruit, saying, look, let's not reinvent the wheel. Let's drill internally to what they've drilled, and then we'll expand out on the rest of the property as time goes on. And again, what we're targeting is structures that are associated with the south area of the Destor Porcupine Fault, which runs right through this area in there. Okay, the PEA update. This is what we put out in February. This is what we're basing our initial economics on. And again, I want you to remember that we have not done the open pits. We ran some models, but it's not in the PEA. What's in the PEA is only underground, mainly because we can actually say we've got enough data to permit this project, and we're well on our way to applying for permits for it. But to back up, let's look at what did we find in the first PEA. We found, if you add the numbers together, indicated inferred 1.56 million ounces of gold here. And then if you look down, you can use cutoff grades. Pick the one you want for underground. I'd say more toward about 3 grams here. You'll see the number on the indicated and the same on the inferred down below down here. So roughly 1.56 million ounces. Now, what went into the PEA was not the 1.56 million, roughly about 940,000 ounces, and then that was edited down for recoveries. So total recoveries a little under 900 or 893,000 ounces. What happened to the rest of the gold? It's still there. We're modeling that with the pits. In the next year, year and a half, you'll see another number come out that says we'll have an open pit combined with the underground. But for now, this is just underground. The NPV was 378 million with a 33% return. Payback's about 3 years on this. Now, is that the ultimate? No, we're still drilling on the project. And over time, we'll improve the economics as we go. That's what you do with PEAs. Until you get the feasibility study, that's when you really build the mine. Now, it's an 11-year plan. The actual initial capital is 150 million. Now, this incorporates just building the project as an underground project and shipping the ore off-site for custom milling. Then there's additional capital that's ongoing, and the price we used at the time was $1,700 gold. Average cash cost $814. Now, fully loaded, it's $987. All I wanted to know is, are we going to be under $1,000 total ounce? And the answer was yes, we would. Now, again, it's very comparable with the Black Fox project we had that we built. 85,000 ounces. Now, could this be more? What if we add a pit to it? Well, obviously, then you're probably going to build a mill on site, and you're going to move it up probably 20 to 40,000 ounces above where you are now with the underground. So, what would that take? That would take probably in capital another $100 million plus dollars. So this figure would be about the same. Now, we did run the numbers on building a mill as to compared to custom milling. The NPV was almost the same, putting in about 250 million in capital instead of 150. But what it does is it knocks about 8-10% out of your internal rate of return. Obviously, you've got to pay back another 100 million if you build a mill. There will be a mill there sooner or later, but not in the initial 3 or 4 years of the project. So let's look at, we talked about 378 million, 33% return. Today's gold price at 1750, or about halfway to the next number here. So let's say round it off to about 400 million after tax. That should be about 260 million. So you can pick your number there, wherever you'd like to set it for investment purposes. Now, what we'll look at now is how do we permit a project like this? How do we take it forward? Well, number one, you have to have a template on the plan that says to the ministry, this is what we're going to do. We're going to actually take a ramp underground called Portal A. Now, we do have a Portal B, C, and D. These are the other blocks of ore, but we're going to start with number A here. This would be the waste dump area. This would be the polishing ponds, the recovery ponds, settling ponds, that sort of thing for water, which you'll reuse in your underground drilling operations. And then what you see is the parking lots as you come into the mine and the new roads. So it's one step at a time as you build a project. Now note, we're only 13 kilometers from town here. You could actually land at the Timmins airport, fly out from Toronto, about a 2-hour air flight, drive out to the site in about 15, 20 minutes, get a coffee at Horton's, and 15 minutes later, you're at the mine site. Now, this is the actual plan, as we call it, between geotechnical drilling would be in green, geotechnical drill holes, test pits, geochemical drill holes, different things you've got to do to actually file for permits with the ministry. We're well on our way. We actually started the environmental work 2 years ago when we first did the merger with Explorer on this property. We knew we needed the database built by the time you want to apply for a permit. And the same thing with the leasing. We started that 2 years early also. So it's paying dividends today that we're just about ready to go with the project. Now, here's the mine access road, and you see the ramp systems built way over in this area here. But anyway, there are all key points here as far as where we've got to drill, what we've got to do, and what we've got to submit to the ministry to actually permit the project. Now, what we've done is we've blown it up a little bit, and we say Mine A. This is where we're going to start. Now, what we're proposing is to go through pre-feasibility study by doing a bulk sample area. This would be the number 9 ore zone. Number 9 is more in what I call the volcanic sediment units, where the quartz feldspar porphyries over here, that's more indicative of what the camp usually has. But every now and then they do have a volcanic unit sitting in the south wall. And we've got that. We've got the best of all worlds on geology here. So anyway, what we believe is the number 9 zone really is the west deep zone. So as time, the other portals that they've targeted, P&E consultants did the work, we'll probably change those a little bit, and don't be surprised if one day we end up with a shaft into these areas. That's typical for Timmins. You start with ramps, then put the shaft in. Now, why wasn't this property mined before? There is no open pits, no underground mines, nothing. Well, once you come across to the west, southwest, out of Timmins, you go across the Matagony River. When the glaciers came through, it ripped the whole top of the ore body off and deposited sand and gravel. And there's no outcrops, no sampling that can be done on the surface. So the old timers really didn't have a big leg up, I guess, on this project area. So we were lucky. We've got virgin ground to mine here. Now, what this is a cross or longitudinal cross-section combination where you've got mine A, B, C, and D. It's all, one mine. It'll be the West Cache. But what we're targeting here is in the purple. We're actually going to take a look at mining a test bulk sample right into this area. We'll bring an initial ramp down. We'll get alongside of it. We'll re-drill this on close space centers. And once we've got that drilled, then we'll go in and set the transverse stopes up. And then we'll mine ore and ship it off the site, and we'll see what comes out. The reason we do this is you've got the drilling from the surface, then you have the drilling from underground, then you'll actually have the sample itself will be about 86,000 tons. to the mill, and then you get a back calculations, and you'll be able to compare all three. From there, you can really accelerate your feasibility study work and extrapolate to the rest of the ore zones in this area. So anyway, that's what we're taking a look at. And I say the West Deep may be connected with the top of number 9. We've yet to prove that. There's about a 500 meter gap in between. We've got to drill, but we'll drill that from underground. Okay, the initial drilling was on the property, and we brought a 2,000 meter section together here. We've drilled across here, the fabric of the zones, hit the West Deep area. Now, I didn't do it. My geologists are pretty sharp. What they did is they projected this and said, look, down below the glacial fill, we should see the same zone if it projects up. And sure enough, on the first hole, they hit it. And they hit it only about 60, 80 meters below the surface here. You know, look at the core from up above to down below. 10-30 would be 2010, 20 would be 2020 drilled. But anyway, you can see the data back in 2010 and 11. They drilled 9 grams of 11 meters, 5.4 at 11 meters, 8.13 at 15 meters. Anyway, you go on, it's very good grade down below. So when they hit it up above, I was happily surprised that it's almost duplicate. You've got almost 10 meters of 7 grams, 10.7 of 7.4. You got 10 meters, 8.7. You've got 10 meters and 9.4, then 6 meters and 9.3. So anyway, it's very consistent. On a contact, it dips at about 70 degrees, just like all the other structures in the camp dip. And we've got that zone. Now, another area is to the south, which this isn't all of it. There's more zones as you're approaching the Desert Porcupine Fault to the south area. But let's take a look. How did P&E consultants look at it for mining? What they said is, first, let's look at the rest of the camp. Let's look at our neighbors next door. So what we did is we did a cutout of the Timmins West mine. Again, this is the original Lakeshore mine, which is Pan American Silver. They mine it over 2,000 tons a day here from 3 different ore zones, and they ship over to the Bell Creek mill. Now, we will look at different mills from the Redstone to Bell Creek to whatever's available for custom milling at the time when we get ready to mine. But you look at us, instead of having 3 specific ore zones, we've got 8 zones sitting in the quartz feldspar porphyry shears here. On the sediment unit, we've got the number 9. That's the 9th structure. And now we're starting to see a south zone. Okay, let's go on to the next slide here. Now, what do we do when we start looking at permitting? You know, basically, you're going to get a closure plan permit that says, here's all the studies you've done between industrial sewage works, compliance, air and noise, approvals, permits, consultations, hydrogrid, and then you've got your baseline studies that have been going on for over 2 years now, where we've assessed the aquatic baseline, and we've done hydrology assessment, surface water, and then all the geotechnical that's ongoing right now should be finished soon. So with that, we're just about ready to go on to the next step, which is file with the ministry for the bulk sample. Okay, the bulk sample. Okay, what will that take? It will take what we call a box cut. It'll take the portal being cut in this area here. We'll bring the ramp down, and then we'll start working our way down toward the ore body that we're going to take on. Now, in the pink fabric here, the ore body sits all with us alongside of us. We picked this specific area right here on the 145 meter level, the 115, and the 85 meter level here. So basically, you have 3 different levels, and you have 4 different stopes, 2 on this level and 2 on the next level. And that will make up about 86,000 tons of material to be processed. So the tonnage is 86,500 exactly what they've modeled. Could be give or take a bit. The application we'll put in will be for 100,000 tons, but that was what we're using in the blocks. The grade's 8.13. The ounces of gold are 22,600 that will come off of it. Now, what do we expect? Okay, we expect, say, once you mill it, we're going to knock the grade down a bit. You're going to lose some in mining. So when you get down, it'll be about a 7.5 gram gold grade when you do the actual back calculation to it. So if you use this direct grade, you'll say, well, geez, that's not enough ounces when you actually produced it. But the actuality is you have a few losses on the way between mining and the mill itself. So in capitalization, you've got your power drops, your transformers, your buildings, the initial box cut to put the portal in. But the box cut's really moving the glacial sand and gravels and gearing ourselves up for a hard rock portal as you start. Then we've got the actual underground ramping. This is the primary cost, 17.38. And then once you're underground, we've got to internally drill it. You have other infrastructure. So the total cost of the project using Canadian dollars is about $25.7 million. The revenue stream coming off the recovered ounces will be about $43 or $44 million. So there should be a net profit at the end of the day. That's what we want to show on this to take us into the feasibility, pre-feas and feasibility study level is can you drill from the surface, designate the grade, design it, then get underground, re-drill it, and then mine it. You'll have 3 data sets to work with to say you do have a project and you should take it forward post-feasibility study. So anyway, this is the plan. You've got the permitting end of it. We're done with the geotechnical drilling. The closure plan will have to be submitted, and that'll be sometime in January, probably more toward about 3rd or 4th week of January. And then once we get the permit, say the end of the second quarter of 2023, we'll start the pre-development work. Then we'll have the decline, the underground stoping, the drilling, and then on to processing and gold sales here. So it's an ongoing, about an 18-month project to take this to the feasibility stage. In the meantime, we want to continue drilling. We want to keep adding to both surface drilling and the underground. And I think our database, we said we're about 8 or 10% drilled, and we're at 1.56 million ounces. So we're open on strike, we're open on dip, and we're open in the north and the south direction on this property. So I can say it's a very robust property to be working with. This covers 10,000 hectares. So only 6,000 hectares were actually gone to lease. We've got the rest, the other 4,000 to work with. It's kind of like having 3 projects in one. So it's very exciting. We don't need to go to some other project, in Chibougamau or any place else. We can stay right at home here and work on our own property. So anyway, we've got a lot to look at, and we're going to take this project forward. Like I said, on strike, down dip. And if you look at zone 9, we have the gap here. But then in the south zone here, I mentioned, we're doing some drilling, or have been doing some drilling. We've identified it, but we're a long ways from actually putting into a resource category yet. And this is just kind of a blow up saying, okay, here's the 9 zone in this area here. And then we've got quite a few of the other structures here, and see all the different hits here. We're not sure what connects to what on this one yet. So stay tuned. We need probably about another 5,000 or 7,000 meters of drilling in this area. Then we can start modeling it. We're still waiting on assays on the lower hole down in here. So I think this is going to be another robust zone. But the good news is as we develop the number 9, we can actually bring a drift across to different areas here and drill some of this from underground as we go. So that brings us to the team. And I've mentioned before, you've got to have a great team if you want to build a mine project. I've worked for a lot of companies, built a lot of projects, and the main one I point to is the Black Fox project. Tim Smith, my chief operating officer, he spent a lot of years with Tech Kaminko up at Red Dog, different operations. He came and worked with me at Apollo, helped me build projects, and I said, well, Tim, while we're doing the mines in the U.S., let's go up to Timmins and let's do the Black Fox project. So he agreed, and he's the main driver up there, along with Ryan Lougheed. Ryan Lougheed was the general manager up there. Well, both of these individuals are top-notch mining people, metallurgists that have done this before and up in the Timmins camp. And they're on it again today working with me. So I feel blessed that I've got some of the top guys working with me on that. Geology-wise, I've got Nate Tewall and Leah Page. Top-notch Canadian geologists. They're actually U.S. citizens, but they spent most of their career in Canada finding ounces of gold. And Nate's running this project. Leah's from the top end of it. Leah Page is running it for being the manager on the project. And she's credited with a lot of the gold that's been found. And then we've got Sonia Agostino, Chief Financial Officer, very seasoned. And then Lisa Buchan. She's my number 2 person within the company. It says corporate secretary, but she's a vice president of everything. She gets involved with everything and keeps the corporation running with me. Now, the directors, Mario Calantonio, he came from the Explorer side, but he actually worked on the Black Fox project years ago, more with his engineering group that's actually out of Timmins. Michael Hobart has been on many boards with me. He's the top-notch lawyer. Folger Rubinoff, and more securities and mining. His is his specialty. Then we got Thomas Kaufman. He's the former founder of M Partners. He was on the board with us at Pure Nickel and started with the Galleon Gold group here, stayed with us. He's the audit committee chair. You couldn't ask for a better person on your board. Gerhard Merkel, he's more of a business type of person from overseas, but his English is perfect. And he's been with the CCM group for many years, both on the director side as well as the investment side. And then Dick Nana, he was my vice president of exploration at the company Apollo Gold. He's on our board now and looks over our shoulder really on the geology, because he took Black Fox from the infancy stages all the way into the mine stages. And then JT O'Neill. JT has been with me in many companies, from Asarco through the Apollo groups. But more important too, he was at Jarrett Canyon as the CEO at one time for Eric Sprott. And he just happened to be on our board when Eric came in and took the largest position to help us get the company started. So Eric was very pleased to have JT on our board. So we've got a very strong board that understands financing and mining and the legal side of it. So what we can say on a wrap up is we're in a premier mining jurisdiction, which is in Timmins. The PEA will support an advanced project here, and that's all I was looking for. It's not the full mine plan. It's just a template that says, go with it now start developing the real mine. And that's what we're doing. So in 2022, we did the drilling on the south zone. It says we have another zone. We'll keep drilling during 2023 while we're waiting for permits. And then the permitting, we feel that we'll file probably by the end of January. And by April, May, June at the latest, we should see the permits to start the bulk sample. And again, this is just a test project, even though it shows we're going to produce gold and possibly make some dollars along the way. So we've got a proven, experienced management team that's had history in the camp. So there's a lot of us that actually have been up there. We know the people, we know the ministry, we know the local folks in town. So I think we've got a leg up on what we're doing here, and we enjoy the Timmins people themselves. We've been out with quite a few of the different factions and groups up there. And I might mention that the Flying Post and Metogamy group, we've had consultation with them. We have an MOU with them in our drilling right now. They're good to work with. We use groups like Nordman to do a lot of our engineering work, along with the P&E consultants, Blue Heron, environmental groups, and MPLH, great drilling group right out of Timmins there. So we use the folks at home for all our consulting, for our contracting and that sort of thing. So I'll stop now and I'll open it up for questions.
Well, thanks a lot, David. That was a great presentation. So we can now start the Q&A portion of the webinar. And just a reminder for our participants, you can type your questions into the chat box at any time. So, David, we have a couple of questions. So I'll start off with the bulk sampling program. So how many meters of development are required in order to develop the ramp and extract the sample?
Well, the direct ramp, before you start in the spirals, will be about 12 to 1,300 meters. And then you'll add in about another 600-700 meters of ramping, and followed by probably another 500 or 600 meters of initial access right into the ore zone. And part of that will be ore as you develop it. And the cost, again, directly just on the ramp will be about $18 million.
Okay, all right. And you talked about the cost, David, but how do you plan to finance that?
The financing, number one, say between now and we'll say June 1st, I think probably that's going to be another $2.5–3 million with some of the drilling that we'd like to do on that one. Now with that, we're looking at a couple avenues. You can do some equity, you can do some flow through financing on that. I will mention this whole project, because there's been no shafts, ramps, anything is flow through eligible, or what I call charitable flow through eligible. Now that can also come back to haunt you on the flow through side when the shareholders decide to sell it, because they're not really hardcore investors. Now charity, that may be a different story. So we're looking at a bit of that. Now, once we get into the 25 million needed for that, we are working with some finance groups specifically. Will we have to raise a little bit of money ourselves? I'm sure the finance groups will require us to do that. But, some of the normal suspects that you look at are Aeromet, Macquarie, that sort of thing, that do finance projects like this. So the other one is that I haven't brought up, or they're partners. We are talking to a couple groups that might want to come in as partners, at least on the bulk sample for that. So there's many ways to finance it rather than just going out and say, we're going to do an equity issue for $25 million. That would be pretty tough on the current shareholder base with dilution. So anyway, we are cognizant of the fact that we've got to be careful with dilution. So we're looking at a lot of different ways to finance. So I can't say specifically how I'm going to do it yet, but we are looking at a lot of options for that. And there are a lot of options out there.
Could you just clarify how much cash you have left in the bank? I saw it on your slide. Was it 12 million?
No. That was probably one of the costs, say, for going underground. The actual cash on hand is a little over $1 million.
Okay, all right.
I think the last financials were like $1.5 million.
Okay.
So we only put as much money in the bank account as we need for the next plan, which, like I said, the next plan will be roughly about 2.5 to 3 million between now and June. And July 1st, we should have actually done the financing with a group for the next 18 months.
All right, sounds good. So just staying on the bulk sampling and permitting, David, you said you're going to file Q1 of next year. Is that correct?
The Q1, let's move it. Just talk about January, probably the third or fourth week of January. The document will be done by the group Nordman and Blue Heron, where we'll file with the ministry. Now, the ministry knows it's coming. We're working with them on this bulk sample plan. And really what the approval is, it's the actual closure plan for your waste dumps and your surface disturbance.
Okay, just moving on to some of the exploration that you talked about coming up for next year. You talked about potentially drilling the south zone, but are there any other targets on your property that you'd like to test?
You know, I've got about 10 of them on my list, but if I was a Barrick or Newmont, I'd have 5 rigs on the property doing it right now. But probably the priority list, number one, will be while you're waiting for the permits, January, February, March, April, I would like to drill more on the extension of the number 9 structure. That'd be number one. Number two would be the south zone area, because I think once we're underground, we're probably going to have to petition the ministry to drive a drift over into the south zone area, because it looks like that will be a sympathetic parallel zone to number 9 and very close to it. So it'd be an extra, say, 150 meters of drifting is all to get over there to develop it. So that's number 2. The number 3 is infill drilling with the actual ore bodies, when we call the east, the far east, or we have parallel structures to it within the quartz feldspar porphyries. We've got a lot of areas that are missing holes that we can upgrade reserves. And then we have the north limb of the Destra Porcupine. There's holes into it from past history that says there's gold there. There's been many mines, on the north limb. The south limb's been mostly productive, but the north limb has not really been drilled on our property. So that would be another high priority target. Whether it's 2023 or 24, that we'll get to that. But again, we have 6 kilometers to look at and drill, 10,000 hectares. We've got a lot. So the list really doesn't end right there, but we've got 4 or 5 high priority targets we know we can add ounces. And that's what I started with doing, was drawing this project to add ounces to the books and get it into a study, phase, which we did with the PEA.
Okay, great. So last question coming up here, David. Could you just sum up the key catalysts that are coming up, let's say in the next 6 to 12 months?
Okay, the first key catalyst is you should look for toward the end of June of 2023 that will file for permits. So we'll put a press release out that says, here of that. In between there, probably sometime in January, early February, we will have some drill data that's lagging in the labs that will be coming out. And this will be specifically on the number 9 ore zone. And they were specifically geotechnical holes that we had to drill through the ore zone at a different angle that should have some pretty decent grades in them to verify what we're going to be mining. That's the second one. The third one will be hopefully sometime in May or June that says, voila, we've got the permits and we can get started. Then look for a press release right behind it that said we've done the financing with whatever group or whatever we're going to do with, or brought a partner in, to actually start the project. And that's how we're going to finance. And then followed by, let's say in July, we say, okay, we've colored in the portal. Now we're off and running on this project. And then stay tuned for the next 12 to 18 months as we develop the ramp, we start developing the ore zones, followed by the end of 2023, early 2024, where we're infill drilling the ore body. And I emphasize, we drill it from the surface. We'll drill it on 12 to 15 meter centers once we get underground. We did this at the Black Fox, and we were very successful in opening up our eyes of what the real ore body looks like and what the real grades are. So that's the next step down underground. So and then complete 18 months out, we should be custom milling ore at one of the mills in Timmins.
All right, great. Seems like you have a lot to look forward to in the next few months. But David, thank you so much for taking time to host this webinar with us today. Just as a reminder for our audience, our next webinar will feature UR Energy, and that's tomorrow, November 30th at 2 p.m. Eastern. Thanks for tuning in with us, everyone. Have a great day.
Thanks, Elena. Thanks, Red Cloud, for supporting us here.